Hi, it is Monday morning, 5th of August, and it is 8 a.m. in New York. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
All three major indices closed lower for the second consecutive day. The tech-heavy NASDAQ was the biggest loser, dropping 2.4% to close at 16,776.2. The S&P 500 fell 1.8% to end the day at 5,346.6, while the Dow Jones Industrial Average slipped 1.5% to finish at 39,737.3. This downward trend reflects growing investor concern over interest rates and the overall health of the economy. We'll be analyzing these factors in more detail with our market experts later in the show. Now, let's take a look at some of the individual stocks making headlines today. Starting with tech, Apple managed to defy the broader market downturn, closing at $219.90, a gain of 0.7%, reversing its losing streak from the day before. However, it wasn't all rosy in the tech sector. Google's parent company, Alphabet, continued its slide for the second day in a row. The search giant's shares fell by 2.4% to close at $166.70. Meanwhile, Microsoft, a key player in the software and cloud computing space, saw its shares drop for the fourth consecutive day. The stock closed at $408.50, marking a 2.1% decline. These contrasting performances within the tech sector highlight the current volatility and uncertainty in the market. While some companies are managing to weather the storm, others are facing headwinds. We'll be discussing the factors driving these trends and what they mean for investors after the break. Moving on to the electric vehicle market, Tesla experienced a significant drop yesterday, with its shares plummeting 4.2% to close at $256.40. This decline comes amidst growing concerns about the company's future profitability and increased competition in the EV sector. In the energy sector, ExxonMobil saw its shares rise by 1.3% to close at $108.70, benefiting from the continued surge in oil prices. The price of crude oil jumped yesterday, with West Texas Intermediate crude closing above $81 per barrel for the first time since April. This surge was driven by supply concerns following OPEC+'s decision to extend production cuts. Lastly, let's look at the financial sector, where J.P. Morgan Chase saw its shares fall by 1.9% to close at $148.60. This decline reflects broader investor anxieties about the impact of rising interest rates on bank profitability. These varied performances across different sectors underscore the complex and dynamic nature of the current market environment. Stay tuned, because after the break, we'll delve deeper into these trends with our panel of experts, who will provide insights and analysis to help you navigate these uncertain times. Now, turning our attention to some other notable movers in the tech space. Amazon's shares tumbled significantly, closing at $167.90. This represents a substantial drop of 8.8%, marking 2 consecutive days of losses for the e-commerce giant. Meanwhile, Meta Platforms, the parent company of Facebook and Instagram, saw its shares close at $488.10, a decrease of 1.9%. This downturn reverses the social media giant's 2-day winning streak. Chipmaker Nvidia also experienced a decline, with its shares closing at $107.30, a 1.8% drop. This marks the second consecutive day of losses for Nvidia, reflecting the ongoing volatility in the semiconductor industry. On the other hand, Netflix defied the downward trend, with its shares climbing 2.7% to close at $442.80. This positive movement extends the streaming giant's winning streak to 3 consecutive days. Shifting gears to the semiconductor industry, Taiwan Semiconductor Manufacturing Company, TSMC, a major player in the global chip market, saw its shares close at $110.20, reflecting a 0.9% increase. This marks the second consecutive day of gains for TSMC. Lastly, let's look at the performance of one of the leading names in the electric vehicle charging infrastructure space, ChargePoint Holdings. The company's shares closed at $12.50, representing a 3.3% increase. This positive movement extends ChargePoint's winning streak to an impressive 5 consecutive days. In the financial sector, it was a sea of red as major banks grappled with the current market climate. JP Morgan Chase, despite its earlier decline, managed to close higher than its peers at $199.10, though it still experienced a significant drop of 4.2%. This marks 3 consecutive days of losses for the financial giant. Bank of America followed a similar trajectory, closing at $37.60 after a 4.9% decline, marking its 3rd consecutive day in the red. Morgan Stanley wasn't spared either, with its shares falling by 5.8% to close at $95.90, also marking 2 consecutive days of losses. Turning to payment processing companies, MasterCard saw a marginal decline of 0.1%, closing at $462, marking 2 consecutive days of losses. However, Visa stood out as a beacon of positivity, with its shares edging up by 0.2% to close at $266.60. This marks an impressive 6 consecutive days of gains for Visa, demonstrating resilience amidst the market turbulence. And finally, rounding out our look at the financial sector, Bank of America closed at $37.60, a 4.9% drop, marking its 3rd consecutive day of losses. The bank's shares have taken a hit recently, with a 9.8% decline over the past 5 days and a 6.8% drop month to date. Despite these recent struggles, Bank of America's stock is still up by 13% since the beginning of the year, showcasing the volatility and potential for recovery in the current market. We'll continue to monitor these developments closely and provide updates as the situation evolves. Now let's shift our focus to the volatile world of cryptocurrencies, where it was another day of significant losses. Bitcoin, the world's largest cryptocurrency by market cap, tumbled 11.1% yesterday to close at $53,955.90. This marks 3 consecutive days of losses for Bitcoin. Meanwhile, Dogecoin, often considered the poster child for meme coins, experienced an even steeper decline, plummeting 15.5% to close at 10 cents. This extends Dogecoin's losing streak to a painful 9 consecutive days. Ethereum, the second largest cryptocurrency, also faced significant headwinds, closing at $2,339.40, a sharp 19.4% drop. This marks 6 consecutive days of losses for Ethereum. These declines in the cryptocurrency market reflect the broader risk-off sentiment among investors as they grapple with uncertainty in the global economy and the potential for further interest rate hikes. The tumultuous performance of cryptocurrencies continued as investors weighed in on the current economic climate. Bitcoin, the leading cryptocurrency, closed at $53,955.90, marking an 11.1% drop. This decline represents a 3-day losing streak for Bitcoin, with an 18.5% decrease over the past 5 days and a 16.5% drop month to date. Despite these recent losses, Bitcoin has still managed to gain 28% since the start of the year, highlighting the volatile nature of this digital asset.